Hi again, it's me. In this video, I wanted to talk about our experience, what we're seeing in the marketplace today as buyers and operators of multifamily, specifically around all of the turmoil that's sort of going on in the marketplace. Rising interest rates, never before seen so fast and so much in a short period of time. We've got crazy things going on overseas politically. A lot of we'll call it demographic shifts here in the US, just a lot of kind of uncertainty. And of course, it doesn't help that the media is constantly shoving down our throat every second the prospect of recession. It's almost as if they really want it to happen via wishful thinking. Anyway, let me share with you what we're seeing in the marketplace as groups that are looking at deals and what that means for us. So I guess starting in March of 2022, that's really when the end of March, early April, that's really when things, in our opinion, have really kind of changed. They were sort of before and after. There was a line in the sand that was drawn. And up until that point, that was sort of the end of probably a three-ish year run where it was mostly, almost entirely, a seller's market in real estate. So if you were a seller, you've got the pick of the litter there. You can pick your buyer. You can ask for anything, and that sort of really happened. But once the first set of interest rate increases started happening, what we've noticed is number one, banks getting a little nervous and scared, so pulling lending, shortening up the credit availability, and what that did for groups like us that are looking to buy deals, that made it harder for us to source a loan for the property. And so, groups like ours and a whole bunch of other ones that had deals around that time period, what they were finding was their debt was backing out or changing their terms on them. So, for example, if you had a deal and the bank was going to bring in $20 million, suddenly they're like, you know what, we can only bring in 16. Well, that shortage of $4 million changes the economics of the deal entirely. And the only way to fix that, right, the only way to make the deal work is go back to the seller and say, look, I'm in a bind here. The bank just cut funding for me. We're going to need you to cut the purchase price. And that's typically called a retrade. And it sort of has a bad stigma around it. People don't like to be retraded on things. But fortunately or unfortunately, that's sort of the name of the game right now in the marketplace, where there's this kind of uncertainty on the credit side and the debt side has caused a lot of groups to have to retrade deals. And so it's now become acceptable. It's in vogue right now. But the way to kind of get around that is just being open and upfront on where things stand with the seller and explain, kind of talk through that because everyone wants to be traded during a deal. So I guess what I'm trying to rearticulate for you is there's been a shift in the market from seller's market to a buyer's market. We're seeing the opportunity and the ability here to use all of the crazy uncertainty, right, to leverage that for lower purchase prices on deals. We've seen a number of deals fall out of contract midway through. We've seen a number of failed marketing deals. What does that mean? It means a deal where if we were selling a property, we'd engage with a broker, he'd blow it out on the marketplace, get a bunch of groups together, and they're finding that the amount of buyers, the suitors coming in, are cut in half, if not more. So only a handful of groups are putting in offers, where before it was 10 or more offers that they would get. So less offers, less lower pricing expectations. So sellers are now understanding that maybe those lofty pricing expectations need to be reeled in because the cost of the mortgage, the cost of the debt costs so much more that the only way to solve that is for a lower purchase price. Now, as a buyer, we're liking this. We love being in a position to take advantage of this buyer's market where we can leverage all of these kind of fear and uncertainty levers and use it as a way of negotiating lower purchase price. There's a saying I heard from a friend recently: "Purchase is permanent." So when you make your money when you buy the deal. So if you can buy that deal at a lower price, 1,000, 2, 5, 6, 10, whatever, $20,000 less per unit than you did before. That's just kind of built-in profitability for the future. So that's what we're seeing in the marketplace. We're seeing a great opportunity for us to be able to buy deals. We kind of like love the uncertainty in the equity space on the stock market side, because I think it lets a lot of investors know that the stock market is a very, very unstable place to put your cash. And we like about this inflationary period here in the market for housing is that as costs go up, rents go up. right? They can kind of match with that. So it really is a safe place to put your cash during these uncertain times. And again, we're in a position now where we can take advantage of this buyer's market. So I'll stop rambling on here. If there are other questions or content that you want me to record, shoot me a note and I'll talk about it. But hope you found this helpful, and I'll see you next time.